Back in the studio this morning with Mr. Peter McGuire, who is the Australian CEO of XM.com. Welcome back.
Good morning, Will.
Mate, plenty happening over the weekend. Some say there's been a little bit of a hiatus on the whole. There's going to be a vaccine thing. Others say, hey, let's get excited. What's your view? What's happened over the weekend and what's happened this week?
Well, do we see a vaccine, and how long does it take to actually work through the market? There's many differing views. You listen to Dr. Fauci, you listen to the Eurozone, manufacturers, big pharma, all of those, I suppose, players in the market, and how quickly is it rolled out? So the uncertainty, I think, remains, and that creates the fear aspect. So the markets have had a big tick to the upside. If we don't see a vaccine within the next couple of months, and if not even in a month, then I'm sure that the markets could take a little bit of a hit to the, I think, that momentum and that sentiment.
Breaking in there, I guess there's a fierce battle between bulls and bears. We spoke briefly now about the vaccine. The question really is, has the market already priced in a vaccine?
I don't necessarily think so, because they've all seen that strong stimulus move and all central bankers have really kicked the tin down the road. So, you know, it's unheralded. What we've seen since mid-March, Dow, S&P, some of those Euro bourses have just been extraordinary gains to the upside, and that fear side, and even that rolls across to, say, something like gold. All of those markets have had strong moves, yet the fear, I think, is very much present.
Okay, so people will be looking for the risk-reward profile for risky assets like stocks and commodity currencies, some of them becoming rather unattractive?
I think so. I think they're fully priced, and that leads to the uncertainty, where do we go next? So, you know, US dollar, is that going to remain range bound? It's relatively strong at the moment compared to where it has been on historical value. Though, if you're looking at interest rates and what the impact's there, it may possibly stay at these sort of levels in the short run. But as I mentioned earlier, those gold points are really where a lot of traders are seeing that upward trend. We've seen strong move to the upside in the last matter of a month, and I think that the momentum's going to take us forward.
All right, with a mixed bag of uncertainty, with an election 100 odd days away, with issues in the South China Sea, with typical, I guess, and perhaps real uncertainty in a market. I mean, how important is gold? Talk me through the gold play.
Well, I think from a US dollar perspective, we had that high in 2011, 2012, 1930. Now we're back at around that $1,800 level. And you'd say, well, hang on, it hasn't even hit those numbers. But when you're looking at other currencies, we've seen dramatic moves to the upside. The yen's up 22% in that time. We're looking at the euro up 14% and the UK pound up 20%. So very, very strong moves. Also the consideration, where does that US dollar trade play? And I think traders are looking at, right, we need to be in an asset, bonds of little value anywhere, and you look at something like gold, doesn't pay a coupon, but the actual capital growth of it in the short to medium term could be quite strong. So that's been the attraction.
Is Trump pulling his punches when it comes to China?
Many analysts are saying yes. Biden's clearly in front as far as the polls are concerned. He's up, and some of them are saying up to 15 points ahead. So where does Trump play? You're looking possibly in the next 30 to 40 days, you would expect something to come out dramatic from President Trump, and it could be an election fought on China. Forced technology transfers, no doubt the tariffs will come into play as far as the trade wars, and as President Trump got that Trump card up his sleeve to be a great disruptor to hit China hard on these matters.
Again, all feeding back into the gold story.
Absolutely. That's the thing.
Talk me through the chart.
Well, as you can see on the top there, that's the blue line, and that's gold in US dollar terms. So it had a high there of $1,920 in 2011, currently at about $1,800 an ounce. So you say, well, hang on, that's performed okay. But when you're looking at the big picture, have a look down there, the next one in yellow or yellowy gold colour, that's the euro. Underneath that, you're looking Japanese yen in red, and underneath that, Great Britain pound. All of those markets are up extremely well, and we expect that upside momentum to carry on across some of those cross currencies. So, pound, having a look what the Eurozone will go through. We think more momentum, and certainly Japanese yen. So I think that whilst the uncertainty with US dollar, I think the fear factor driving into the markets is going to stimulate that market.
There was a comment in some research over the weekend that said giving an alcoholic more alcohol is like pushing nations, Italy, into more debt. a headline there is mind the Euro gap on Monday.
Well,
what's the story there?
Well, the EU as far as a coronavirus fund. So you've got differing nations. You've got the Dutch on their side, and then you've got Germany and France saying we should actually grant some money. There's a difference between granting money, and that would be the alcoholic having another drink, versus loaning. Loaning means that you pay it back. Granting means that you take a gift. So that's where it's a mixed bag. You've got some European nations, and that gives you, I think, a broader view. Is this the icing on the cake that actually dismantles the Eurozone? You look at what Brexit's now moved on, so they're out. Is this the fracturing, you've broken the egg? Is this the Fabergé egg that the Eurozone was? And now you've got all these bickering nations, all with a different agenda. Italy with debt levels 160, 180%, I think, GDP. So do they ever pay this money back? Are they living in austerity for the next 30 to 50 years, if not a century? So there's a great degree of disharmony across the Eurozone.
Another great question framed by analysts really was, would you consider this? Buy a German bond that pays negative interest for 10 years or buy gold that pays zero?
Gold pays zero, but the other side, of course, is the capital growth, the chance. As far as the bond's concerned, you get your money back. So if you give them $100 on round terms, you get $100 back. On gold, you put $100 into gold, you might end up having $200 worth of gold. Through capital gain, if we have interest rates at these sort of levels for many years to come, if not another decade, then what happens as far as growth? The frontier's got to look very, very well positioned for something like gold.
Are we waiting for the next stimulus?
As far as stimulus is concerned, I think from the US, we've got to just wait and see what the Fed does over the next matter of days. I think you're really going to be focused. The guidance is going to be, if we don't see inflation above 2.5%, I'm fairly sure that the investor standpoint is going to be, we just keep the stimulus rolling, different forms. They've bought junk bonds. They've kicked the can as hard as they can down the road. So I really think it's got to a point in time now that the dollar is looking a little bit fragile.
Okay, Pete, let's round up on this next one. So the statement really is, unless a vaccine is found, a full-blown panic takes hold of markets again. What's then the path for gold?
Up. Simple as that, Will. Up.
Peter McGuire, the CEO of XM.com Australia. Thanks for speaking with me.
Thank you, Will.